to another episode. This is your imported accountant, Maria Mejia.
Maria Mejia, yes.
Maria Mejia.
And I am, what do you call me again?
The Panastic business coach.
Oh, yes.
David Pataki.
Dave, there you go, David Pataki,
Nice.
yeah. You
Do
know,
the intro for both of us.
she's the consummate professional here. So speaking of professional, I've got a joke for you. Heard this one on the radio the other day and said, I love it. So how do you stop bacon from curling?
I don't know how.
You take its brooms away.
No, I think you just take it out of Canada.
So I don't know if we're...
My
so
punchline
obviously
was better.
We're talking about curling, of course, the sport curling, because they use brooms.
Oh, I thought you were talking about like curling your hair.
No, we're talking about bacon curling in Canada.
Canadian bacon or
Yes.
U.S. bacon?
Canadian
Actual
back
bacon.
bacon. Back
Actual
bacon.
bacon.
All right. So if you guys haven't figured it out, if you're new to the podcast, Maria is the imported accountant because
It's
she...
me. Yeah, continue.
Because she's actually from the U.S., but
USA.
the back bacon and the likes from Canada has enticed her to come. Actually, no, it was probably more her husband.
Yeah, yeah.
But I am the beneficiary of this, and so are you guys, because
You get my knowledge from 2 countries.
yes, she's got double the knowledge in that head of hers. So I'm so happy to be co-hosting this with her and also partnering with her in our business.
Yeah. Ditto.
Ditto, yeah. So we are recording
Put
this.
the
What is it? 2 days before Christmas.
Woohoo.
So this is exciting. A great time of year.
Merry
for
Christmas Eve.
Eve. Yes. And if your name's Eve, then look. Merry Christmas Eve. Eve.
All the Eves.
You know, just like when we're talking about being panastic here, or stupid little jokes. I always used to say, because pizza. It's a Canadian pizza joint, and I used to go. I'm going to have a piece of pizza. Where's the drum roll when you need it? A piece, a pizza. Right? Just like I'm having a piece of Domino's pizza. I know, pizza. Anyways, don't worry, folks. I'm here all week, so let's.
At least for now.
All right. So yeah, again, it's the end of December, and what typically happens at the end of December.
New Year's Eve.
New Year's Eve, the celebration, and all that fun stuff. But as a business owner, what is typically happening on December 31st?
The end of the business year end. I can't speak today. Business year end.
We have not had any drinks. Maria actually doesn't drink at all, so
So
that is
I'm
not
just plain
possible.
crazy.
She's just high on life.
You know it.
Yes, it's the fiscal year end for a lot of businesses, just because it happens to be an easy way to do stuff. So because it's the end of the fiscal year, we thought, this would be a good time to talk about looking back at your previous business year. So why do you think it's important, Maria?
Well, it's always good to look back at your history. There's that quote that if you don't learn from your past, you're doomed to repeat it in your future. So looking back at, especially in a business sense, looking back at what did you do well this year, what brought in more revenue than expected, or what were some unknown expenses that came up that you were ready for, that you weren't ready for. That way you can fix any mistakes and try and do better in the future. So
Absolutely.
Just looking back is good.
I was looking at, I was ready to do, you should have done the mic drop after that. If you don't pay attention to the past, you're doomed to repeat it type of scenario. And that's actually, that's typical history thing. But that is so, I'm saying so 3 times because it's so important to realize that when it comes to your business, that if you don't learn from your mistakes, you're going to do it again. And the key to businesses, actually, it's interesting. I learned from one of the people that I follow that, you don't necessarily need more good ideas to make more money. You just have to make more, or just make better decisions, more better decisions.
Yeah.
Because there are a lot of decisions that I've made in the past that have cost me dearly. So if I can make less of those mistakes, then I'll actually be more profitable. So what's a great way to avoid those mistakes is to learn from them. Mm-hmm. And that's what a roundabout way of saying, Maria, good point.
Yeah. I always make good points. I was a dancer after all. Anyways.
You were a dancer?
I was.
Oh, there we go. A new fact has come out. Maria, maybe I should call you the ballerina. Maria the ballerina.
That was my dream at one point. If counting didn't work, I'd be in the Russian ballet.
Russian.
It's the highest ballet company ever.
I think this podcast is, pretty much off the rails. So let's see if we could bring it back here.
All right. So when you think of year-end, David, most people think of, making sure that their books are closed at the end of the year. They're not entering in any back receipts, back invoices. They're thinking, okay, let's just get it all up to date and then throw it at the accountant to file the taxes. What should people actually be doing at the end when it comes to their accounting? Do you know?
Well, sorry, folks. There, I was actually wandering. My mind was wandering a little bit there.
I was saying too many words for his brain to.
Well, there was a lot of good content that came out of there. So why don't you just repeat the question so I'm 100% sure of it.
All right. So so I'll just repeat the scenario. At the end of the year, most businesses think, okay, so when it comes to closing books, they just make sure that the receipts are in, their invoices in, and then they just throw the rest to the accountant to file their taxes. Is there anything else that people should be doing at the end of the year besides just catching everything up?
Right. So yeah, I think a lot of people they look at the books is something that they need just to do, complete, get it done, get it to the bookkeeper so they can close off the year and so that they're able to prepare for the tax season, for the taxes that need to come up. But that's not the whole. I mean, that's the CRA compliant part of bookkeeping. But that's really that's the bottom of the rung priority.
The minimum.
The minimum. It's something, and I'll tell you what. If you're a serious, I'm gonna be serious for a second here. Hopefully more than a second. But if you're a serious business owner and you truly want your business to grow, then those books are a tool, a massive tool to help you to become a much more successful business owner. So just getting it done and sliding it off to the bookkeeper and washing your hands of the whole situation is probably the worst thing that you could do. Well, actually, the worst thing you could do is not do the books at all. However, the second worst thing to do is not use that tool. And what are the tools that you can get from having a complete set of books?
So if you have your books, the first one that people should be looking at is their income statement or their profit and loss. They're the same thing. They show you how much income you made in a certain time frame, as well as lists all the expense that you had in that same time frame. And that way, that bottom line's a pretty good, it's a starting point to see how your business is doing. You can get a quick glance on were you profitable this year? Were you not profitable this year? And kind of just a mile high view of, okay, what were the largest expenses? Maybe I should be looking into that and seeing why it was so big. Is it reasonable for it to be that big? And so on and so forth. But that is not the only statement that business owners should be looking at. They should also be looking at the balance sheet and the statement of cash flows. They all work hand in hand together. So you start at the profit and loss, and then you can look at your statement of cash flows, see, okay, how much cash was actually moving in my business? Is it moving at a reasonable rate, at a reasonable amount? And then that flows into the balance sheet, saying, okay, at the end of the year, here's where your business sits. Here's where it is right now. the bank, if you had to, if your lenders came up to you and said, hey, I need this paid off today, tomorrow, do you have enough in your bank to kind of cover all that stuff? Just those three statements are kind of mile high view of how your business is doing. But there's many more formulas that you can use to dig down deep and see how your business is doing.
Right, I know that might sound like a lot of work, and that's part of what Maria and I do, as a business, as a sort of as the base offering. Every business that we work with, we help them establish a profitability report, and that's taking parts of all the reports that Maria talked about, plus a couple other factors, and we put it together, and we're able to show you how profitable you are. You can run the profit and loss statement and you can go, oh, look at that. I made $90,000 this year. And then you look at your bank account and you go, well, I only have $25,000 in the bank account. So I clearly didn't make the $90,000 I thought I did. It's because not everything is taken in consideration. When you do those reports, they're focusing on one or a specific aspect of each area of the report. So that's why you've got to look at them together. You've got to factor in certain things, especially with the profit and loss. If you have outstanding receivables, let's say even the receivables are $30,000 outstanding, that will show up as profit because that in your books shows it is as an invoice and as revenue. But even though you may not have collected those monies at that point. So that's why it's important to take a look at the whole picture and not just look at one. If you go to an accountant or the bookkeeper and they print out the reports and you look at the profit report, oh, look, great. Like I said, I made $90,000 this year, so that must have been really good. But and the point that we're trying to make here is that obviously, if I saw that report, I'd feel pretty good. Oh, we made 90 grand this year. That's awesome. But it's not a realistic look at it. And if you truly want to grow your business, you need to know exactly how profitable you are. Not sort of high level like you were saying, because that doesn't give you a truer picture.
Yeah. And any accountant, any bookkeeper worth their salt and price should be giving you these reports, especially someone who's doing your books on a monthly basis. They should be giving you this report. That way you can look over it and see, okay, how am I doing month to month, quarter to quarter? Am I, is my income growing at a reasonable rate? Is my bank account growing at a reasonable rate? Am I getting more expenses, more liabilities as the year goes on? That way at the end of the year, you're not saying, okay, at the beginning of 2021, I had, my credit card, which is just $3,000 that I owed at the beginning of the year, no biggie. But then at the end of the year, I wasn't keeping track of things. I took out a loan and I kind of forgot about it. I kept using my credit card, due to COVID, and you had to, buy all this stuff for the business. Well, now my credit card is still at $3,000, but I have this big loan that I kind of forgot about. That's at, $20,000. I'm like, oh, wow. What happened there? When did that loan start? When is it due? Am I going to have enough money this coming year to pay off that loan and not be penalized and things like that? So having the reports on a monthly basis helps you keep track of how your business is doing throughout the year, and not just at the end where, like I said, you just get that mile high view and you're like, oh yeah, I'm fine. Yeah.
Yeah, there was a lot of great information there, Maria, and I just want to add my little take to all that, right? Like just the 90,000, for example, if it's what's your profit, it depends too on what your actually overall revenue was. Like if your overall revenue was 30 or 300,000 and you had a $90,000 profit, that's pretty good. But perhaps you had $1 million in revenue and $90,000 profit. And that, on the other hand, is not very good at all. So what we're kind of be looking at here is the actual profit margin, right? So there's gross profit margin and then there's net profit margin. So those two things you have to take into consideration. So the gross profit margin is taking the cost of the goods, what it costs taking the revenue and subtracting the cost of goods sold, right? So what did it take you to deliver that product to the customer? And you subtract that from the revenue, and that gives you your gross profit margin. And that's typically higher, or that is higher because you haven't then taken any of the overhead off, right? So the net profit margin is when you've already taken your cost of goods off, you've got your cost of goods sold, or the COGS as we like to call it in the industry, and then you got to take off the overhead, the monthly payments, all the rent and all that fun stuff that you got there. Then that gives you your net profit margin. Now, why it's important to know what those are is because if you know what they are, you can track them, and you can see if you're actually tracking in the good sense or in the bad sense. Whether you're growing the profit margin or whether it's shrinking. Just because you look at it and you go, well, $90,000 is great profit, if we're going to use that number, perhaps last year your profit was actually $120,000. So if you only look at just at the current year, you don't know what you did last year. Or you could go, well, I did 100 or I did 80,000 last year and doing 90,000 this year. But then last year was a special year because COVID hit, there was lots of shutdowns. So maybe it was just down to begin with. So what did you do the previous year? So you want to start tracking from year to year and go back, 3 to 5 years, depending on how long you've been in business, and see, where are you tracking? Are you growing? Are you shrinking? And then, as Maria pointed out, you want to look at your expenses. Are you, with all the price of things changing now, they're all going up. So, which typically means that your profit margin is probably shrinking. So, have you been adjusting your prices? Or have you been looking at vendors to see if you can do some cost savings in other places? These are the things that you're able to do if you're tracking your finances on a monthly basis. If you wait till the end of the year and you look at it and go, oh boy, I didn't realize that the cost of that material had gone up 25%. That affects your bottom line, right? Then if you were able to identify that, 3 months, 6 months, 8 months ago, then you were able to make some adjustments. Maybe you had to look for a different vendor, or maybe you had to just simply raise your prices because of just the fact that you had to. But if you're not tracking, you can't manage it, and then you won't be able to make any adjustments to help you out in the long run.
Yeah, to kind of illustrate that a little bit, we can go to our most favorite lawn cutting company.
Yeah, I was thinking if there's a lawn, cutting business that's following us,
you're just getting
they're
lot
getting
of good
free
advice.
coaching on an ongoing basis here. So good on you. So share this. If you know any lawn maintenance people, share our podcast because
lots of good free advice. Okay, anyway, so our lawn company. So this year, as we know here in Ontario, the gas prices have risen a significant amount compared to prior years. So say this lawn company was in business for about 4 years, so they have 4 years of data that they can look at. And they also do snow plowing in the winter because we are an all-season company. And
we're in Canada.
So, it's a pretty easy transition. And so in both, in the summer and the winter, we got to use gas for in the summer for the mowers, in the winter for the plows, those push plows, thingamajiggers, I don't know what they're called because I'm not Canadian. So we use gas for both of them. And so if we compare the gas costs in 2020 to the gas costs in 2021, we'll see that significant increase. And so the COGS will be significant between the 2 years. It'll be a significant difference. But if our prices have stayed the same, as David said, our profit margin is going to be smaller in 2021 compared to 2020. So we'll see there. That'll be a red flag to us saying, okay, our profit margin is smaller, but we're still doing the same amount of work. We're using the same amount of gas. So do we need to decrease or find other ways to use either not electronics, use different equipment that doesn't require gas since gas prices is becoming ridiculous, or we have to stay with the gas equipment because that's just what there is and we got to increase our prices. So having that comparison between prior years And knowing your industry really well will help you figure out, what is the best move to do. Okay, so just kind of a gut reaction for 2022. Okay, we're just going to increase our prices overall because that's pretty common every few years to just increase your prices due to inflation and things like that.
Right, or you could look at maybe getting, is it time to upgrade your equipment, something that's more fuel efficient, or maybe there's a diesel option. The point there is, it doesn't really matter the specifics. The point there is, if you're not tracking it, you don't understand what's happening, so therefore you're not making the best choices. So, we did a Facebook Live today as well, and one of the things we were talking about was to celebrating the some small victories in the past year. For some of us, it's been pretty tough. COVID has affected the shutdowns and so on, has affected a lot of the businesses. So I like to put a little shout out there. Don't look at it as try to look at the positives that happened in the past year, and celebrate those, even if they're small victories. Celebrate them. If you've written something down and joined the 5% club, then you can celebrate something like that. Just throw that out there as well. We want to talk about the KPIs, the three to five KPIs. Did you want to touch a little bit on that, Maria?
Yeah, so, the key performance indicators, or KPIs as we say in industry, is milestones or standards that you are trying to reach in your business. For example, it can be something simple as, having 10 employees in your business throughout the year, or it could be, gaining 10 new clients every single month for the year. It can be whatever whatever you want it to be in your business, but every single year, every single month, we should be looking back at these KPIs and figuring out, are they reasonable? Did we reach them? If we didn't reach them, what is it that stopped us or prevented us from reaching these goals? And what can we do next year to either reach these goals or reach the new goals?
Right, let's do a very simple example of that, so to hopefully help people understand this. Like for example, with the lawn cutting business, you want to generate $3,000 profit. That is your standard for the month, right? Now, so there are 3 to 5 things that you need to do every day / week, depending on how often this is, that will help you, that you need to do to make sure that you're going to generate that $3,000 profit. Right? And one of those things, and Maria brought up very eloquently, was the gas prices. So the profit margin is, again, something has to do with the $3,000 here. So if your gas price has gone from $1.15 a liter to $1.35 a liter, or when it was up to $1.42 a liter, that directly affects your profit. And if you're not tracking that, you're not seeing that happen. And here's the beauty thing about that. If you want to make sure that you're hitting your standard, your $3,000 a month profit standard, then you need to track it on a regular basis. And if you do that, then you will hit it more often than not. And the reason you will hit it more often than not, because if you know the 3 to 5 things that need to happen for you to make that $3,000, you're into week 1 and you see that you're not on target to hit that, because you already know, again, I need to cut so many lawns, I need to spend so many hours, I need to be able to use this amount of gas, and so on and so forth. And you figured that out, and then you can audit what you're doing and go, yeah, you know what, we're actually spending 3 more hours more than we should be, so we have to make an adjustment on that. And then you make those adjustments, and then you're able to get back on track so that you're able to make your $3,000 standard. Now that's sort of a roundabout, simple way of explaining what the 3 to 5 KPIs. Pick that standard. Make sure you are checking it, checking your 3 to 5 KPIs on a daily, weekly basis to ensure that you're going to hit that standard.
Yeah, and kind of going with that. So we had that KPI standard of hitting that 3,000 income each month, profit 3,000 profit each month. So to break it down, not just the gas prices, but Like how many clients do you need to be able to reach that amount? And then, okay, so you need 20 clients to reach that due to, the rise in gas prices and everything else that it is to run your business. Well, then how are you going to get those 20 clients? How many people do you need to contact? How much do you need to spend on Facebook advertising and things like that? Having those as well as your daily KPIs. Okay, I need to call, or I need to send out flyers, I need to knock on X many doors to be able to get those clients that I need to reach my goal for the end of the month.
100%. Again, Maria, bang, hitting the nail right on the head there. Mic drop,
Yeah, you know it.
for all the non-video people, there was a mic drop there. I know it was a virtual mic drop, so there was no big sound there. But
We'll make
so we're
big
going to
next
stop
time.
that bacon from curling. We're going to take the brooms away.
Or the curling iron.
No.
Anyways.
No. That might be the American answer, but
That's the
American
answer.
punchline. All right, so that is basically actually you are the
Summarize.
champ of summarizing. So
I have many titles. So we need to, end of the year, look back and, celebrate your wins. Figure out, are you hitting your goals? If you are, definitely celebrate that. If not, that's okay. What can you be doing to hit your goals next year? As well as, are you keeping your books up to date? If not, what can you be doing better? Do you need to hire a professional to do it for you? Do you need to hire a professional just to remind you to do it every single week? As well as, look at your financial statements, not just the income statement, but also the balance sheet and the statement of cash flows, and definitely keep track of KPIs.
right, and just great job summarizing that up as you always do. A thought occurred to me when we were talking about this here. Like, you know what? The books have to get done. CRA requires that you keep your books, that you keep them up to date. So why not use them to your advantage? And that's what we keep talking about. You need to do them anyways, so keep them up to date and then apply the reports, apply the analysis, take a look at it. We could do the profitability report for you, but it is something that you can do as well. I know some of you might think, okay, I'm not really good at numbers. It's not as difficult. You have to know what numbers to look at. I'm not trying to oversimplify this, but you don't need to be a rocket science to figure it out. And you can always just get a hold of us and we can help you set that up. Or if you would like, we could take that on for you as well to make sure that you're profitable. And all the businesses that work with us that we help increase their profitability, typically the profit margins do increase because we're able to show them cost savings, plus we're able to show them how to build more value in their pricing and help them be more profitable.
Yes.
Yes.
Pretty much.
All right,
Couldn't have
folks.
said it better.
It is it's that time of year, so happy holidays to everybody and Merry Christmas for those who celebrate that. Please like, share, comment,
Subscribe,
rate. Pass it on. That bacon joke is well worth passing it along to 5 different people at least.
At least. And also send it over to your lawn maintenance friends, because we are going to continue to give free advice to our lawn maintenance friends because they're the easiest people to work with, I think.
All right, so if you have any questions or comments or want us to address something, please send it to us and we'll be gladly to address it in a future podcast.
Yep.
Until next time.
We'll see ya.
Cheers.